This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. And so when I get started working with someone new, I always discuss a trading plan, meaning I want them to I actually send them a list of questions and I want them to create a plan, a written plan that they follow. But when it comes down to individual investments or individual trades, you don't necessarily have to have a whole full-blown plan of 2 pages long or something like that, answering all the questions that come up throughout the course of a year. But what I do want you to have, and what I think you need to have to be consistent, is a trading plan for that individual investment. So you have to kind of go into it. Now, and that might not be written, although you're going to be a lot better off if it is written. I don't typically write it down, but I know in my head, before I get into a trade, I have the plan for that trade, and I want to follow that plan. So that's the key thing I want you to get out of this. It really doesn't matter the time frame. This is a 3 time frame trade that I visualized. Basically, when I saw it playing out, I knew exactly where I wanted, what I thought could happen, where the target would be, and because it's a counter trend trade, it was basically a full-blown target, not necessarily trailing a stop, looking for a big win. So I thought it was worthwhile going through this in detail. I'm going to show you what I was looking at, how I executed, where the stops go, where the targets are. And so let's go ahead and get going on this. And so I'm putting all 3 time frames up at the same time. I show the arrows for executions on this trade that show up on the trading view. So on the left side, I've got the 30-minute chart, 5-minute on the middle chart, and 1 minute on the right chart. So now you might be asking, why aren't I using a 60 and a 10 and a 2? And I'm telling you, you can do that. I just happen to notice that for me, since I don't have a whole lot of time, I want to look for trades that happen more quickly, happen more often. And a 5 and 1 minute tend to happen more often than a 10 and a 2. It doesn't mean it's better or worse. It's all about what works best for you. If you have the time to sit back for the whole day, then the 10 and the 2 minutes is probably a preference. But for me, I know I don't have that time. So let's just look at this. And again, we can assume this is a monthly and this is a weekly and this is a daily. There's nothing wrong with applying these time frames like that so that you understand what I'm trying to get across. So on the left side, this is the whole reason why I was willing to take this trade. All right, this is the reason here. In other words, if I didn't see this, then I don't want to have an interest in doing these. Like, I just don't want to jump on something just because, I get this minor little look on a 5-minute chart. I want to see something on the bigger picture. Because again, I don't want to sit there and take every trade and be in and out all the time. You can see this is one trade. I got short and then covered half and then covered the other half. And I was out, and that's what, 15 minutes, something like that. So, but look at what happened on the 30 minutes. First, we had this big move, and then we pull back. Nice move to the upside, consolidate, and then another move to the upside. So keep that in mind when you're looking at the ADX. Strong ADX reading based on the buyers, strong ADX reading based on the buyers, and then we make this last peak, and look at what the ADX does. Okay, I mean, I know the MACD was diverging too, but when I see ADX dropping like that and not even being able to get above the 50 level, I'm thinking this is pulling back. All right, I'm thinking we're going to get a pullback, and my target is still going to be, right in here. Now, this might turn into a big reversal. It could turn into that, but I'm not going to play for that when I know I'm playing counter to the trend. These moving averages are still rising, so I'm playing for a quick move. And the reality is I actually played for just a move to the 18. That was I had that in my head when I did it in advance, so I'll show you that in a second. So we've got this ADX pattern and MACD both diverging, but again, this one's telling me, this is the one that gets me a lot more intrigued about playing this. So that's the first thing, and that's taking place up in here. pretty far away from the 18. I have enough room to trade it back to that level. So if you notice what happened on the 5-minute chart, or the weekly if you want to call it that, we actually got a move where this came down and violated what I was sort of looking at as a trend line, but it also came down and broke the 18 again and broke the 40, and the 18 started declining. Okay, now look at what happened after that. We got a little move to the upside and tested the 18, which was now declining. Okay, now we had a pinch here when this was up here. And then we got our second pinch. This pinch I actually like a little bit better in this situation because we had the moving average declining and we failed at the moving average. Okay, now it's not a picture perfect pinch because we don't have two higher lows, but you know, we got a pretty good look here, failing at the 200. And again, this is the whole reason for the trade right here. All right, now I've got that in mind, so this is all about entry. Now I could just take this, taking out this prior low, but I'm a little nuts, and so I like to go down one more time frame. And you notice what happened. We got this big red bar telling you the sellers are coming in, causing the MACD to cross down, causing the red DI to get going here. And then we got to move back up, and the move up was actually a little strong. It caused a little bit of overrun. Look at that little, that wasn't really a pinch. So I didn't really take that big bar down, and then it moved up and rallied. And while that was happening, the MACD was actually underneath, and it came back and pinched underneath. And so I kind of looked at it like sort of like a 2 time frame pinch play. I mean, that's how I was looking at it. But keep in mind, whole reason why I'm doing the trade is up in here. This is the 30-minute, and I'm thinking this is going to at least work its way back to the 30-minute 18. So the trade is put on at 30. Let's just give you the ballpark numbers. It was actually 397.85. And I like to use round numbers when I trade, just to keep it simple in my head, and I don't have to worry about it. So I know it's showing 87, but it was 85. And the stop I was using was 398.25. So it was 40 cents is what I risked. I risked 40 cents in the trade. Okay, and the target was 396. It was 396.55. 396.55, which should have been down in here. Yeah, okay, so this moved down. I actually got a better, I think I got a better because it really dropped when I got triggered. So I think I actually did a little bit better than that. Let's just call it 39.60. But the reality is, from entry to my stop was at 40 cents, and to the target was about 3 times that. Okay, so I knew whatever I risked, I was going to make about 3 times that if it may hit the target. Now, I don't get that for the whole amount, only for half. And the other half, I get 1-to-1. So it works out to about a 2-to-1 trade. 2-to-1. So you risk $100, you make $200 in this type of trade. Okay, at least the way I'm doing it. It's kind of, I just want to give you an example. So if you risk 200, you make 400, right? I mean, that's how this would work out. But if this would have just turned on a dime and not made it, for some reason decided to turn up and take me out, I would have been out up here with a 40-cent loss. I would have lost 40 cents on a number of shares that I did. Okay, so as this dropped down and started making a pretty sizable move to the downside, I actually did not have an order in. I'm not all that good at using TradingView for execution, but once I saw a couple big red bars come down, I went ahead and took it. And you can see where that little, you see where that little arrow is pointing up there when I hit the blue. So, it was a pretty good first target. It was a little bit better than 1-to-1, and then my stop goes to a break even at that point. Now, if you notice, this is actually really important. So we got down to about 396.74, which is pretty close to the target I was looking for, and we got a little bit of an up move. I mean, when this is happening in real time, it doesn't look like a big deal now, but when you look at it in real time, you're feeling like, wow, what the heck is going on? This looks like a pretty good rally. But as I've said in the past, I'm not getting out when this is confirming the low. So as we drop down, I'm seeing this red DI making a higher high. So I don't want to tighten the stop yet. All right, I'm leaving it here. I mean, if we started to get something really, maybe getting through the moving average or something like that, I might just hit the market close button and just get out. But we don't have that. And in this case, I'm just looking at it saying, you know what, this confirms. So I think we get another leg to the downside. So I left my order down at 396.50. And again, I think I got a little bit better than that. But I put the order down there, and it basically came down and hit me. It didn't really give me much of a problem. Now, when this went to a new low here, you see this? So that's a lower low here. The red DI was not hitting a new high. So at that point, you start lowering your stops like this so that you're not giving back too much if it decides to reverse and create a divergence here. I've done this in the past. I did a video not long ago on how I use the DI lines for this, but I guess I just wanted to show, the main thing is the structure of this setup, which is 3 time frames. I got the higher time frame, which is the divergence pattern and stretched away from the moving average, and that's my target. And then I've got this medium time frame, which is telling me the trend is turning down. And then I have my executable time frame where the trend is definitely shifting to the downside, and I'm trying to execute with really tiny risk where I feel like, okay, I've got 2 time frames heading down now. And then you try and manage it however you want. I mean, obviously I didn't catch the low here. I mean, I didn't have a major support level until down here, and I was getting out above that, which is fine. I'm just trying to get in and get out. When I'm playing counter trend, I don't want to mess around. I don't want to deal with, look at the size of these bars now. You see the size of these bars? I don't want to sit around and be watching this come back against me or anything like that. I want to play it to the downside and be quick with it. So when you're on a daily chart, playing this off of a monthly reversion, just play for a swing in your favor, or a swing or two. Get a couple of good legs out of it, and then just take a target. Don't try and squeeze every last bit out of the move. It does look like this is making a pretty good low now on an intraday basis, and I know on my bigger picture, I'm not looking for this to fall apart. I mean, if it does, it does. But my analysis is sort of giving me a bias that says, yeah, we can pull back when we get overbought. But I'm sort of expecting more of an upward bias over the next week or two. So anyway, I hope this is helpful in seeing how I'd go about using 3 time frames to play a reversion trade in this manner, and making sure I've got 2 time frames kind of working for me. One is the time frame that's kind of like the trend time frame with the entry pattern, and then this one is a nice little trigger setup where I get moving averages moving in my direction, MACD and ADX really showing strength. All right, go ahead and post any questions or comments. We'll see you next time.